Wall Street Week with Louis Rukeyser is made possible by the Corporation for Public Broadcasting and by the annual financial support from viewers like you. By the travelers, over 30 million Americans benefit from our insurance, investment services, and managed health care. The Travelers, America's Umbrella. By MFS. MFS, helping mutual fund and institutional investors achieve their financial goals since 1924. And by Prudential Securities. With more than 5,600 financial advisors nationwide, Prudential Securities can help you invest your money wisely. Produced Friday, December 31. Our panelists are Laszlo Barini, Elizabeth Dater, Michael Holland, and William Waters.
Good evening, I'm Louis Rukeyser. This is Wall Street Week. Welcome back. Well, I'm sorry. Nobody told me not to dress. Actually, as regular weekly viewers are aware, we do this every year. It's our 24th annual Wall Street Week New Year's Eve party. This year occurring on, of all nights, New Year's Eve itself. The night we dress up and then dress down all the bad predictors of the year. We'll see what really did happen this year to everybody's money, in the financial markets and in the economy at large. Or, as often seems more appropriate in the 1990s, in the economy at small. And then we'll check out our chances of doing better in 1994. And in the annual celebration known as Marquis de Sade Night, we review our panelists' investment advice for 1993 and reveal how it really turned out. But there, alas, it's getting harder and harder to get much use out of my trusty whip. Because the truth is that the stock picks they gave us here have, once again, been working out amazingly well. Indeed, the depressing fact is that they seem to be getting better each year. It's the toughest competition anywhere in investing. Each New Year's Eve, each of our 23 panelists has to submit a specific list of investments, which then has to be left untouched for the next 12 months. No excuses, no exceptions. In 1992, according to detailed computations by our friends at Bloomberg Financial Markets, the average gain of all the panelist lists was just under 14%. This year, nearly 19%. Once again, nearly doubling the return of the benchmark Standard & Poor's 500 with dividends reinvested. Though the S&P was traded every day and reflected the wisdom of everybody else who didn't watch Wall Street Week. Poor babies. Indeed, the four wizards with me tonight submitted lists that showed gains of from over 32% to nearly 50%. And rather than rest on their remarkable laurels, they'll be giving us their best concrete advice on where the money will be made in 1994. Why, if we weren't such good-hearted and charitable folks, we'd hold this program on pay-per-view. But before we see whether they can continue their dazzling performances, let's take a quick look at what else was happening this week, which was far from the worst of the year for the beleaguered American economy. The increasing signs of economic pickup included a broad improvement in the housing market, including the strongest monthly sales of new single-family homes in 7.5 years, a heartening drop in unemployment claims, and the best reading on consumer confidence since September 1990. It was all a massive improvement over the slam-dunking that both business and consumer confidence registered earlier this year. And everybody seemed happy except the inflation-wary bond market, which proved once again that the only thing it has to fear is the fear that somebody else may actually be getting a job. But heck, in the holiday spirit, even bond traders are welcome here tonight. First, though, let's check out what actually did happen in Wall Street in the final week of 1993. The Dow Jones Industrial Average marched on Wednesday to its 33rd record of the year at 3794.33, but was scuttled by a wave of computer selling in the final minutes on Friday and ended with its first loss in 5 weeks, down less than 4 points at 3754.09. The other blue-chip indexes were mixed, but there was notable continuing strength in the Amex and NASDAQ composites, both of which have been up for 7 straight sessions. Our elves have clearly been working too hard over the holidays to have time to change any of their votes on the market's performance for the next 6 months, and they continue to net out to a neutral +1. Gold continued its recent comeback, climbing above $390 an ounce for the first time since early August, when it was coming down from its 93 peak of 407. The prices for frankincense and myrrh were not immediately available. With the recent signs of economic improvement, President Clinton was seeking to profit, as all his predecessors have cheerfully done, from the myth of simultaneity, which credits or blames the president of the day for everything that happens in America. Hence, it's not surprising that 3 top Clinton economic advisors reportedly staged a command dressing down of Washington Post staffers at the White House for the sin of quoting a leading economist as saying that the U.S. economy would have bounced back even if, and I quote, voters had elected Bugs Bunny. The advisors were reported to be hopping mad. And in a related development, the White House roundly denied reports that the next chairman of the Clinton Council of Economic Advisors will be Elmer Fudd. Phil Waters, what do you make of Wall Street's end-of-the-year performance?
Well, I think it was terrific, Lou. I think the market crept quietly to new highs, and the computers sold today, but the people were all going off for their New Year's vacation.
Hey, what's that all about? There's not much trading. Everybody's off for the holidays. Suddenly, in a few minutes, the Dow dives 20-plus points.
Exactly. It was the computers come in with big numbers and sell hard, and there's nobody to buy. So we had, I think, a little situation that is not to worry, and I think the market will start 1994 in pretty good shape, based a lot on the economic news that you just opened with.
Well, how important is it that the bond market seems fearful?
I don't think it's very important. I don't think the inflation fears are founded. I think there was just a little blip up. Again, there was very little volume in the bond market. So when there's a lack of volume, the price movement shouldn't signal a trend.
My column, Bill says, no reason to fear anything, including fear itself. Do you agree?
I think inflation is going to continue to be the key, Lou, and I think that inflation fears in the bond market are overdone.
Now, that's interesting because you called the turn in the bond market pretty well. You thought that it was time to stop aggressively buying bonds a few weeks back. Do you think it's time to start buying them again?
If they got through 7%, Lou, I think I'd become interested. I think at best bonds at the 6.30, 6.35 level are uninteresting. And
you think they're priced about right?
They're priced about right. I think inflation will be 2 to 3% this year. I think we've seen the best in inflation for many years to come.
And if the bond market stalls, stocks can continue to advance in your judgment?
Yeah, we've had periods in the past where stocks and bonds have diverged. I think we'll probably get that in the next couple of years.
Beth Data, do you share this relative euphoria?
Well, actually, Lou, I think that the market has been interest rate driven really for the last 3 or 4 years here. And it seems to me that interest rates may go up somewhat, but ultimately that will be very positive for the market because earnings will then be improving.
Why will earnings be improving next year? We had a pretty good year for earnings this year.
Right. I think that if you have an economic recovery, I think that many of the corporations in the United States that have restructured or downsized are very, very well-positioned and very well-leveraged for improvement on any kind of sales volume improving in this economic recovery. And I think the earnings leverage on the upside there will be very significant.
Beth, you come to us with considerable expertise in the area of media. There have been a lot of mergers going on there and merger threats. What do you expect to happen next in that area?
I think it's going to continue, Lou. I think that there's a lot of interest not only from the standpoint of U.S. buyers but also European buyers. And I think that any of those companies that have software programming or significant distribution systems for that media are candidates to at least have joint ventures with one another, if not continued merger activity.
We'll get to your specific picks later on. Laszlo Barini, nobody in this world watches program trading more carefully than you do. Was there any significance to what happened today?
I don't think any long-term, but I think it was unfortunate that it happened because I don't think the market should have been open this afternoon. I think the New York Stock Exchange made perhaps a little mistake in keeping the market open on a day where people weren't interested. It was a case of when the cat's away, the mice will play. A little bit of program selling makes it look like the world has a crack in it, and it doesn't. And I don't think it has any implications further on.
You raise an interesting point, because the same thing was said for the day after Thanksgiving. Do you think the stock market should be shut in those days?
Well, the day after Thanksgiving would give you 4 consecutive days of a close, and I think that's perhaps too much. But I don't think there was anybody who was interested in being at work, certainly after lunch today.
And what do you think of the market status right now?
I think the market's in pretty good shape. I think that it's not extended at all. It's surprising that it's done so well without having gotten overbought or overextended. I'm very impressed with that.
All righty. Now, before we look ahead with these world-class stock pickers, let's review where we've been in the year that once again left all the ever over-publicized financial pessimists running desperately for their alibis. The Dow Jones Industrial Average cut like a knife through butter, announced for it by would-be gurus over the years, finishing with its third straight annual gain and its 10th in the last 12 years, up more than 450 points, or 13.7%. The Dow's heavy concentration of reviving industrial giants helped it to nearly double the performance of the broader blue-chip indexes, but the biggest gains of all were recorded in the smaller stocks featured in the Amex and NASDAQ composites. And there was finally some cheer in the ranks of investors in the so-called precious metals, as gold, and even more dramatically silver, turned in winning years. Despite a continuing fall in U.S. interest rates, which lessens the attraction of holding our currency, the dollar had another year of remarkable steadiness, with a well-publicized fall against the Japanese yen offset by gains against all other major currencies. Meanwhile, the U.S. economy has now officially been out of recession for more than 2.5 years, though you'd have a mighty hard time proving that to the millions of Americans still suffering from an extended period of sluggishness and frustration. Indeed, though you might not guess it from the upbeat reports coming out of Washington this week, the economy actually weakened in the first year of Bill Clinton's presidency. In reality, the strongest quarterly growth reported so far this year in gross domestic product, the total output of goods and services within our borders, was 2.9% in the third quarter. And that three-month performance barely exceeded the weakest quarterly growth reported in 1992. The tempo is clearly quickening again now, and as in last year's final 3 months, when the economy scored its most robust gain in 5 years, 1993's final quarter is expected to be the year's best. But most economists are convinced that this stepped-up pace will not be sustained. On a brighter note, the painfully slow-growing economy has continued to deliver subdued news on inflation, which at the start of the 1980s was threatening to submerge the American economy. The increase in the Consumer Price Index for the 12 months ending in November was only 2.7%, the lowest since 1986. Unemployment, which had reached a 16-year low at the start of George Bush's administration, before rising to a high of 7.7% last year, has finally begun to decline. November's 6.4% rate was the lowest since January 1991. The sharp decline in short-term interest rates definitely helped pull the nation out of recession and provided some powerful fuel for the stock market's rockets. But the steep fall in rates has been bad news for those still heavily invested in money market mutual funds. Their yield fell last spring to the lowest ever for such funds, barely 2.5%, and today's average yield isn't much higher. Long-term rates, which had resumed their own multi-year downward trend in the spring of 1992, dropped over a point more this year, as investors increasingly came to believe that inflation was truly under control. The yield on the 30-year U.S. Treasury bond tumbled to 5.77% in October, the lowest since the government began regularly issuing 30-year bonds in 1977. Today's yield has crept back up to 6.35%. The price of oil used to be a major concern for Americans. It spiked above $40 a barrel during the Iraqi crisis of 1990 and helped trigger the recession. But the oil price provided nothing but good news for consumers in 1993. Today's price of $14.17 a barrel is near a 7-year low. Weak as our economy seemed to Americans this year, it was notably stronger than most of our overseas customers, and their inability to buy more of our products accounted for the U.S. trade deficits deepening to levels not seen since 1988. Incidentally, this nation has not recorded even a monthly trade surplus since the presidency of Gerald Ford. And where do we go from here? The Commerce Department's index of so-called leading economic indicators has been as erratic as the economy this year. But while the figures remain feeble, the index has now at last put together 4 straight monthly increases, confirming the impression that, however anemically, growth will continue. Bill Waters, which of these numbers, if any, is the one to watch in 1994?
Lou, I'm an inflation watcher, and as long as inflation stays beneath 3%, we've got a good market environment.
Do you expect it to do so?
I sure do.
Mike Holland, what are you watching?
I'm going to differ with Bill, having been with him in the past on the inflation. I think that inflation will be okay. I think the GDP and the growth in earnings will be the key going forward, Lou.
And what are you looking for there?
I think we'll be up 3% at least in the coming year.
It's down from the pace of the fourth quarter, but a better year overall.
Solid year overall, and the earnings will be much better than anyone suspects.
Beth Data?
I'm going to agree with Mike on that, Lou, except I'm going to look for GDP of about 3.2%, a little bit faster even.
That's good news for Bill Clinton, isn't it?
I think it is, but I think that there will be some inflation fears because I think they're still very deeply embedded in the economy, as we can certainly see through the bond market activity this week.
Laszlo Brini, what are you going to be
I think
watching?
the most important thing for the stock market is going to be sentiment. This has been a market which people have been fighting. And if we get to the point where people accept the market and the bears give up, then I think we'll get overheated and we could have a good correction.
You've said in the past that bull markets don't end because they've been on for a long time or because prices seem to be overvalued. They end because people are too euphoric. Do you see any signs of that starting yet?
Starting to see a little bit of it, but every time we hit a new high this year, the newspaper headline said, market at new high, but. When we get rid of that but, then I would worry.
All righty. Now comes the moment of truth as we reveal our own winners and sinners of 1993. And before we get to the investment results, let me acknowledge a remarkable performance in that delightful and venerable game of predicting the Dow by a panelist not here tonight, the old fox Monty Gordon, who was admitted in April to the Wall Street Week with Louis Rukeyser Hall of Fame and who proved that he's still firing on all cylinders by being the closest of all 23 in predicting a year ago the Dow's close tonight. He said 37.55, a miss of less than 3 points. And in predicting its low for the year, he said 32.35, a miss of less than 17 points. Indeed, if Eddie Brown hadn't nailed the high for the year within a point, Monty would have won that one too. His prediction was only 3 points away from Ed's. The worst predictions, incidentally, were once again the most pessimistic. Perennial bear Jim Grant thought the Dow would dip to 2,500, a mere miss of 750 points or so, and would close at 2,650, a trifling misjudgment of some 1,100 points. And Bernadette Murphy couldn't see us climbing above 3410. The best individual stock pick in 1993 was Lou Holland's Zenith Laboratories, which rose more than 273%. The worst was Jim Grant's short sale of McDonnell Douglas, which proved the possible risks in that sort of transaction by losing nearly 125%. But now for these overall champs, who were 4 of the 5 best in the field at stock picking. A late surge by Frank Cappiello actually enabled him to finish 4th, Bloomberg told us tonight, but there was no change at all at the top. Bill Waters, you have it. You were too cautious about the overall market. You had the Dow topping out a couple of 100 points south of here, but who cares when your recommended portfolio for 1993 soared 49.2%, led by Callaway Golf, which more than tripled. Clearly, all those hours you spent on the links over the years were not wasted after all.
They caught up with me.
Mike Holland, you were not exactly chopped liver yourself, with a portfolio gain of 46.3% and a prediction for the Dow's yearly high that missed by less than 10 points. Perhaps even more important for safety-minded investors, you didn't have a single loser in your portfolio, a distinction that was shared only by Ralph Acampora among the other panelists. You keep this up, my friend, and you may have a career in this business.
Thank you, Lou.
Beth Dater, only Jim Grant outgloomed you for the most bearish Dow predictions of the year, and I never know when he's kidding. But wow, did you pick stocks. Led by the 130-point gain in Liberty Media, your portfolio of a dozen stocks averaged a gain of more than 37%. Gosh, I wonder how well you do when you're bullish. Congratulations. Laszlo Brini, you have the distinction of being the only repeater from last year's All-Star list when you finished 3rd. This year, you not only continued to be our most steadfastly bullish and therefore our most correct elf, but your stock list finished up an average 32.3%. And this sort of thing appears to be getting to be a habit with you. Please keep it up. So congratulations to all for another truly great year of keeping our regular weekly viewers far ahead of the pack. But enough of that mush. What have they done for us lately? For starters, let's have from each of you the true inside word on the highest close, the lowest close, and the final close for the Dow Jones Industrial Average in 1994. Bill?
High, Lou, of 3950, low of 3500, and we're going to close at 3802.
And change?
No change.
Mike?
Lou, a high of 4,200, a low of 3,300, and a close of 3,800.
Not so far from where we are now.
Right. A year not to please anyone.
I'm going to go to Tahiti. Beth?
I have 3,800 on the high, and I have 3,500 on the low, and I have 3,700 on the close.
Again, a narrow, less volatile year you're
Yes.
predicting.
Sort of neutral with the rotation continuing to take place within the groups and the categories.
Laszlo?
I think we'll surge to 4,300. We may trade down as low as 3,700. Probably close just above 4,000.
I'm glad that you are true to your colors, and I hope you're right. One thing for sure, and this is my only unqualified guarantee of the evening, some of them will be wrong. But if you would like to see the full predictions with specific stock selections from all our panelists, including those not here tonight, on where to invest specifically in 1994, all those lists will be included in tonight's transcript. So if that sounds good to you, you can get that special New Year's transcript by sending $5 to Transcripts, Wall Street Week, Owings Mills, Maryland, 21117. That's Transcripts, Wall Street Week, Owings Mills, Maryland, 21117. And now let's find out what these four think of the very best buys for 1994. Bill?
I have 12, Lou. TNT Freightways, Summit Care, Computer Data Systems, Telmex, which are the ADRs of Telefonos de Mexico, MediaVision Technology, GenCare Health Systems, Health Trust Incorporated, Multi-Care Companies, Horizon Healthcare, Buffets Incorporated, 3Com Corporation, and Genentech.
Mike?
Lou, we've got two drug stocks, Merck and Bristol-Myers. Two oil stocks, Atlantic Richfield and Pennzoil. And two insurance stocks, Chubb and TIG Holdings.
Beth?
Okay, Lou, in equal weightings, I have two automotive stocks, Automotive Industries and Chrysler, Telefonos de Mexico, Telmex also, Catherine Stores in the retailing area, IHOP, the old International House of Pancakes in the restaurant business, Gavette in the financial asset gathering business, Forschner Group, and then in the media business, I have the New Age Media Fund, Paging Network, the New York Times, and Harcourt General.
Aren't you glad I asked you about media earlier? Sounds like a setup, but I didn't know. Laszlo?
Well, I would be very surprised if we didn't have a correction and a shakeout. And I think it's going to take its toll on some of the hot areas. So therefore, I'm going to be short. I'm going to short All Pro Products, Centigram Communications, DSC Communications, Glenair Technologies. I'm going to continue to be short things like the Indonesia Fund, Newbridge Networks, Players International, Prima Donna Resorts, the Taiwan Fund, the Argentina Fund, the Turkish Investment Fund. I will go long the Hong Kong index puts. So overall, I think there's going to be a little bit of shakeout.
Laszlo, do you see any conflict between the fact you made the most bullish Dow prediction and you have a list of short sales and puts?
No, because I think we're going to have a sort of return to reality, and good stocks will do well, but a lot of these frothy areas we're going to take hits.
Now, you're all aware, as was demonstrated by Jim Grant's experience this past year, that when you go long a stock, the most you can lose is 100%. When you go short, there's no limit. You can lose 6 zillion%.
I am aware.
Okay. Now, tell me what's going to happen to the markets this year, Laszlo, in terms of the internal mechanisms. Is anything going to be done about program trading?
I don't think so. I think that the hue and cry is not that strong. And I'm looking for 1994 to be a continuation of the trend. The public's going to keep buying. The market's going to rotate and correct it internally. And I'm not looking for it to run away. If it does, that would be bad.
So basically, you're looking for a year that's pretty much like this year, except there will be different stocks going up.
And I think at some point we're going to have a correction. And
there we do have to stop. Thank you for correctly predicting a correction at some point. Thanks to these people for being the world's best sports. Hope you'll be back with us again next week. Then we'll get our first look at 1994 in the company of one of Wall Street's most eagle-eyed and influential money managers. He's Leon Cooperman. He's always worth listening to. He's terribly influential on the street. Meanwhile, this has been Wall Street Week. I'm Louis Rukeyser. Good night.
Wall Street Week with Louis Rukeyser is a production of Maryland Public Television. Made possible by the Corporation for Public Broadcasting and by the annual financial support from viewers like you. By the Travelers, providing American business with insurance, investment services, and managed health care. The Travelers, America's umbrella. By MFS. MFS, helping mutual fund and institutional investors achieve their financial goals since 1924. And by Prudential Securities. With more than 5,600 financial advisors nationwide, Prudential Securities can help you invest your money wisely. For a printed transcript of this program, send $5 to Transcripts, Wall Street Week with Louis Rukeyser, Owings Mills, Maryland, 21117. Transcripts are also available to subscribers of the Dow Jones News Retrieval Service. Wall Street Week with Louis Rukeyser is produced by Maryland Public Television, which is solely responsible for its content.
This Chicago presentation of Wall Street Week is made possible in part by American Airlines.
I don't say this to many people, but the job we do is the most important job I can think of.
Okay, guys, listen up.
I mean, there's no such thing as a B-plus mechanic on this airline.
Let's do it. Let's go.
Even the most junior mechanic can keep an airplane in this hangar if there's a hint of a problem. You might think a job like this would become routine, but every now and then, I just take a walk through the terminal. And right there, you see what's important.